AMA?
Yeah, we can get started with the project introductions here.
Yeah, sure. So before we start, I would like to share with you that in this AMA, there is $50 in land up for grabs for 5 most curious questions that you are going to ask either live or in the comments. So please go ahead and either drop your comment or raise your hand at the end of this AMA. Our guests are going to answer them and you are going to receive your rewards. So, yes, I suggest that we start with some nice little intros about Landshare and also about Polymesh. And I guess we're going to start with you, Jordan, first.
Yeah, thank you. My name is Jordan Frisky, and I'm the CEO for Landshare. For any new listeners or people who aren't familiar with our project, we are a tokenized real estate project that enables fractional investment in cash flow properties from across the United States. I would say our high level goal is to make real estate investment accessible to everyone by leveraging the power of blockchain technology. So, in essence, I think we're injecting new technology into a very traditional asset class. And by doing so, we're able to offer lower minimum investments, substantially lower fees, and serve investors on a global scale in a way that just wouldn't be possible through the traditional means. And I think throughout this AMA, we're going to touch on a lot of those things and discuss the advantages of tokenized securities and how they're superior to the alternative in the traditional finance space.
Thank you, Jordan. And on this note, I would first of all would like to check if Graham has his mic ready.
I'm good to go. Let's do it.
Yeah, sure. Yeah, so please go ahead with the Polymesh intro.
Yeah, sure. I guess, hi, everybody. I'm Graham Moore. I'm the head of tokenization at the Polymesh Association. The Polymesh Association is a not-for-profit that's dedicated to the growth of the Polymesh blockchain ecosystem. So I think it was mentioned a little bit earlier. Polymesh is a layer one blockchain. It's built specifically for financial securities, for real world assets is the term everybody loves talking about now. Real estate, derivatives, stocks, bonds, all that kind of good stuff. And so our team had started in the space back when it was called security tokens. The real world assets term didn't exist yet. Back in 2017. And so that was a company called Polymath, which some people might have heard of. And so at Polymath, we started building technology on Ethereum. Ethereum was the blockchain where all the developers were. It was where it made sense to start building tech for securities. And we were really the first company that started building any technology whatsoever for regulations and for securities on blockchains. So we spearheaded the ERC 1400 standard, which was the first one ever, first ever ERC made for security tokens. We got some good adoption with that, but we kept talking to more and more large financial institutions, and they kept telling us that they didn't like Ethereum for the regulated asset use case. And so we said, okay, well, if we want, billions of dollars, trillions of dollars, hundreds of trillions of dollars of assets on blockchains, securities need to be on them. And so we said, okay, well, if they don't like Ethereum, let's build a blockchain just for this use case. And so Ethereum, as people know, it's public, it's permissionless, anyone can do anything. It's kind of built for all use cases. And so with that respect, it's not hyper targeted at regulated assets, which have a lot of really weird quirks about them and a lot of regulatory requirements. So we said, okay, well, instead of building a blockchain just for everything, let's build a blockchain just for securities. So we started building Polymesh back in about 2019, and then finally we went live with it in 2021. Polymesh has been live now for a little over 2 years. We have 4,000 KYC users that have onboarded to the chain. We've had 32 assets that have been created, although I think that number went up yesterday. And we have 17 licensed financial entities that are operating nodes on the blockchain. So I'm sure we'll dive into Polymesh a bit more later, but that's a quick high-level introduction.
Yeah, thank you very much for this nice overview. And I guess, commenting on what RWAs are, back in the days, not many people realized that, stable coins are also kind of, not even kind of, a direct representation of an RWA. on the blockchain. So thank you on this. I suggest we jump straight to, first of all, educating our community and our guests on, first of all, what RWAs are, because some people might be, first comers. And I would suggest that we, do just that. So, why should people, Graham, it's to you. So why should people care about the tokenization trend, in the first place, and what's there that should not be missed?
Yeah, I think people should care because it's happening. Whether people like it or not, the financial world is constantly changing. There's new technologies that get created. There's new regulations that get created. Everyone right now is excited about the potential Bitcoin spot ETF, and that's largely spurred on by BlackRock getting into the game. BlackRock CEO said tokenization will be the next generation for markets. I mean, that he's kind of maybe the most important person in the world in terms of holding people's assets and deciding what to invest in and deciding where the future goes. And he's calling it the next generation for markets. Boston Consulting Group is predicting that there will be $16 trillion in tokenized assets by 2030. There's a number of other companies that are predicting similar things. I've heard 10 trillion, I've heard 30 trillion, I've heard kind of all around there. And so, I mean, it's a trend that is happening. People are starting to realize that blockchains are very good vehicles to store and transact value. And so while Bitcoin was created, 2009, and people have seen that it works really well for money, we then saw things getting created on Ethereum, like DeFi applications. People can now create some type of asset very, very easily and very quickly. They can transact that asset very easily and very quickly. And then ultimately they can do things like take loans against that asset without necessarily having to talk to a human being. And so blockchains are just really, really good vehicles for storing and transacting value. And so people are finally starting to realize that. And we're finally now starting to see it really seep into the world of traditional finance.
Yes, exactly. It's very nice to have your real world asset represented on the blockchain and to be able to connect it to the world of DeFi and the endless opportunities that DeFi presents for your specific RWA. So, as it was mentioned, as Jordan already mentioned, that we are going to talk more about about tokenized securities specifically because it's your area of expertise. So maybe you could share with us, some of the advantages that come with tokenizing your specific security over not doing that.
Yeah, so a few of them. So I love talking about this one thing. Back when I was in university, I worked at a bond fund. We managed $10 billion. I think they're now managing about 30 billion or something. And so I was working at a bond fund, and I was a kid in university. And my job every morning that I came in would be to print something out from a computer onto a piece of paper, and I would have to compare the amount of the bond or the amount of interest that we, as the wealth manager, thought we had or that we were owed versus what the custodian thought that we had or what we were owed. So, this was in the year, 2013 or 2012. I was still checking to make sure that two numbers in two different spreadsheets matched up. That doesn't make sense now in a world of the internet, in a world of global connectivity, in a world of blockchains, where previously in traditional finance, everything is in its own little siloed database. The custodian doesn't really talk to the wealth manager, and that data doesn't really have one golden source of truth on what to agree on. So there would literally be days where I would go, I found that we got paid 0.001 on this, but the custodian thinks we should have been 0.0001 or something. And so I'd have to go in, I'd have to call someone on the telephone, I'd have to say, hi, there's a discrepancy with this, and we would have to sort it out somehow. And so that makes absolutely no sense anymore. And so what blockchains have done is they've given us a global single golden source of truth where everyone can agree, okay, this is the state of the world right now. You own 2, the other person owns 5, you are owed 0.037 units of interest or whatever the case may be, and every single person can agree. And so that's a really, really exciting thing. And what it does is it just brings down cost for every single person involved in the whole entire traditional finance sector. And it eliminates a lot of useless jobs, like myself being a kid going into some office and checking 2 numbers on a spreadsheet and making sure they match up. And then it also allows more people to issue more assets as well because the costs are coming down. So, tokenizing real estate as one thing that we're talking about today. People previously probably wouldn't do that with their own house. It costs a lot of money. You have to get a lot of lawyers involved. But now that you can do it in a much more streamlined way, and where people can potentially trade those assets for pennies instead of hundreds or thousands of dollars to make trades, because you have to have lawyers papering documents, you have to have a transfer agent involved, you have to have someone literally signing a piece of paper. You have to have people calling other people on the telephone. It might take days, it might take weeks. Now you can just do a trade instantaneously for essentially free with a blockchain. So those kinds of things are why I'm really excited and some of the benefits.
Yeah, totally agree. A universally available info with the advantage of not being of anybody, being able to meddle with it, but it's still available and easily checkable. I suggest that we transition now that you mentioned tokenizing real estate, and we go to Jordan and ask them about and ask him about some nice things that come with tokenizing real estate and this type of RWA assets.
Yeah, so I think Graham really touched on a lot of things that we've found in the traditional real estate sector. And with tokenization, what we can do is kind of break down a lot of those barriers that make it difficult or make it cumbersome to invest in real estate, or even just transferring an asset from one person to another. Like, look at a traditional setup. You usually would take out a loan, make a down payment. So now you're getting a bank involved. You have to contact a realtor, a real estate agent, a title company. Then the title company has to draft everything up, submit it to the county. The county has to register it. So it's when you're talking about the lack of an ultimate source of truth, I think real estate is a great example of that. Because even if you, in the county records, it says that you own this property, well, this guy might have a claim on your property, or this guy might have a claim on your property. So, the whole process is just so archaic, and it's so much paperwork, and there's multiple different organizations that have to be involved in just the simple process of transferring a real estate asset from one person to another. And talking about fractionalization, that's essentially impossible to do in the traditional sense. It's just not something that people could do. But now with the blockchain, we can very easily fractionalize assets down to like $1 increments or even less if you wanted to. So now instead of making like a $30,000 down payment, if you want to get into rental properties, you can get started with just a couple dollars. And then on top of that, with Landshare, we handle all of the management for you. So it becomes an entirely passive investment opportunity. And even for somebody who's like a seasoned property investor, they might prefer something that's a little bit more streamlined, that doesn't require them to take on debt or deal with the management of the properties, or they want something that's a little bit more liquid so they can buy and sell more easily. And I think with the blockchain and tokenization, we can create these these secondary markets that are decentralized and allow you to trade fractional shares of real estate anywhere in the world. I think that's really the most interesting part of what we're doing at Landshare. The idea that we can digitize this asset, this big asset that is, worth $150, $200, $300,000, and break it down into these little pieces and instantly trade those pieces anywhere in the world for like maybe a 15-cent fee. To me, that really feels like what the future of finance should look like. And that's why we feel like RWA and tokenization is not just a subgenre of cryptocurrency, which is kind of how a lot of people view it right now. I think it's more so a fundamental paradigm shift in how we handle the exchange of securities from an institutional level all the way down to like a retail investor. It just makes everything much cleaner, simpler, and as Graham pointed out, it gives us an ultimate source of truth, so we know who owns this asset or who owns what fraction of this asset, and there's no disputes. It's global. There's no centralized party that has to delegate all this stuff. So that's why we're excited about tokenized real estate and just the fact that it makes it more accessible to more people.
Yep, this is absolutely a global trend. If you would like to tokenize anything, it literally could be anything, and with it being represented on the blockchain, this is absolutely magnificent. And yep, having a team of people, a company that handles all of the business for you. When we talk about Landshare and with and thanks to the blockchain, it's obviously transparent and easily available and checkable, and you can access your assets freely once again, um, anywhere in the world. This is exciting. This is very exciting. So thank you, Jordan. And the next topic on our agenda is we are going to ask Graham about the ins and outs of the Polymesh blockchain. And I would specifically mention its description, which is public permissioned one, because we often hear about, permissionless blockchains, aka public blockchains. So what's the deal? What does a public permissioned blockchain imply?
Yeah, so I'd say there's different quadrants of blockchains, right? So you mentioned there's public versus private, but then there's also permissioned versus permissionless. So people on this call probably familiar with public and permissionless blockchains. Those are Bitcoin, Ethereum, Solana. Anyone can kind of do anything anytime. But then there's also private permissioned blockchains. People might have heard of maybe R3 Corda, or private instance of a bank running Hyperledger, which is sort of akin to Ethereum. And so there's those two kinds of things. And after speaking with a lot of big financial institutions, they understand that the way of the future is a public blockchain. They understand that that's where all the assets are eventually going to end up. But they're still very concerned about regulatory requirements. That's why we haven't seen trillions and trillions of dollars on blockchains yet in terms of regulated financial securities. It's because they're very afraid of the infrastructure, and they're very worried about getting fined and getting in trouble with regulators, and potentially losing client funds and not understanding the legal process for if something goes wrong, et cetera, et cetera. So what we said is, okay, you understand that public blockchains are the future. What if we gave you a public blockchain so people can see what's going on in the blockchain, but it's permissioned, meaning only certain people have access to the blockchain? And so how we structured Polymesh is all users have to be KYC or KYB verified to onboard to the blockchain to be a regular user. And then all of the operator nodes, or the validator nodes, if people want to call them that, all the validator nodes are operated by licensed financial entities. And so one thing that we kept hearing over and over again from JP Morgan, Goldman Sachs, Bank of America, all these kinds of banks, when we were talking to them about real world assets on the blockchain back in the day, is they cannot move $100 million of an asset for their client, pay $5 in fees on Ethereum or whatever it is, and have those $5 go to North Korea. But that's essentially what happens all day on blockchains like Bitcoin and like Ethereum and like other chains. Is people make trades. Whoever mines that block, or who wins the block reward from staking, it can be North Korea, it can be Iran, and those are countries that these big financial institutions, they're not able to deal with them. So them winding up in a headline somewhere saying, JP Morgan gives $10 to North Korea, that's just a non-starter. There could be sanctions involved, there could be massive fines involved, and so that's really why we think a lot of big banks haven't gotten into the space for real world assets with public permissionless blockchains. That's a big deal for them. So we said, okay, well, what if there's a blockchain called Polymesh where it's public, people can see what's happening, but all of the node operators, aka the people who create fees, who generate fees, who accept fees, and then who generate blocks, what if those are all licensed financial entities? So what if they're a broker dealer, or they're a custodian, or one of these other types of licensed financial entities? And so for them, that says, oh, okay, cool, that's fine. I have no problem giving $5 to this licensed custodian. I have no problem giving 6 cents to this other licensed custodian. That's totally fine for them. Those are entities that are visible to them and that they're able to deal with. And so that was one of the big things about why we felt we need to build Polymesh instead of just continuing to build on Ethereum.
So is it, more centralized in a way, but in a way that's publicly verifiable?
It is, yeah, right. And so, by definition, it's more centralized because there is some governing body, the Polymesh Governing Council, that decides who those entities are. There are other blockchains as well that do have those types of governing bodies for who can run a node. I think Hedera Hashgraph is like that. I think Algorand is like that as well. Don't quote me on that if someone is like the biggest Algorand or Hashgraph person, and it's slightly different. But I believe there are lots of blockchains who do have some type of permissioning aspect on who the node operators are. But Polymesh takes that a step further and says, well, banks and the largest financial institutions in the world, they want to know who the node operators are, but they also want to ensure that all the users in the blockchain are KYC or KYB verified. And so I think there's actually a proposal made today. I don't know who it was by, as someone in the Senate or the Congress in the United States, which actually is describing pretty much every blockchain as being unsuitable for use because of these KYC concerns, and something like Polymesh would work. And myself, if anyone can see my photo on the Twitter space, I wrote the first ever ABC book about Bitcoin. I love Bitcoin, I love Ethereum, I love public permissionless blockchains. But I also live in the real world, and I understand that regulations are very, very important, especially to the world's largest financial institutions. And so, to get trillions of dollars in financial securities on blockchains, we really have to make sure that we're playing on the right side in terms of all the regulations, and something like Polymesh can help with that.
Yeah, but I guess that's a very good direction for you to be for you as a blockchain user to be able to know for certain that you are paying the validators in in your country or in some countries that are, I would say, more on the right side of things. And on a related note, I would like to pass the mic to Jordan. Maybe you have some thoughts on the prospect of a dedicating blockchain being built specifically for real estate RWAs or any other RWA industry, like a being the sidechain for RWAs or something.
Yeah, I think when you're dealing with securities on any blockchain, but particularly like a permissionless blockchain like Ethereum, for example, you have to build this sort of compliance layer on top of the chain because the chain itself is not really doing that for you. It's just a bunch of anonymous addresses sending funds back and forth. So you have to build your own kind of compliance layer. And right now, there are a lot of different solutions for security tokens and identity verification and things like that. I remember back when we started Landshare, we were actually looking very closely at the ERC 1400 standard for security tokens. So there's just a lot of different options for projects that are more consumer facing or more DeFi centric. I think it works out pretty well because you have greater access to the general public. As Graham said, but at an institutional level, there needs to be a little bit more focus on compliance, and the needs are a little bit different. So I think having a layer one blockchain that's built from the ground up for traditional finance is crucial because as these institutions move on chain, they're going to want a sort of turnkey solution where compliance is baked in, like Graham said, where they're not paying gas fees to sanctioned countries. They're not dealing with malicious anonymous actors who may be from North Korea, who may be trying to exploit their protocols. And when everyone is KYC'd onto to enter the blockchain, you kind of eliminate a lot of those things. So I think it's an important component of the overall movement towards tokenization. And I think we're going to see more and more of that kind of move towards permissioned protocols, even on permissionless blockchains.
Yeah, so Polymesh kind of has a built-in, KYC feature, like on the blockchain level, on the very fundamental level. And by the way, I wanted to ask you, Graham, about Polymesh's connectivity. Is it there? Is it planned? Does Polymesh even need external connectivity with other chains?
Yeah, it's something that we do think about. And so Polymesh is a blockchain based using the Substrate framework. And so if anyone likes Polkadot's built on Substrate, Kusama's built on Substrate, Edgeware, Moonriver, there's a bunch of other ones built on the Substrate blockchain framework. And so it'd be pretty simple to connect to those blockchains. You could also connect it to Ethereum if you wanted, to Bitcoin if you wanted. There actually is a bridge from Ethereum to Polymesh. And so originally there was a token called Poly that was an ERC20 that was built on Ethereum. And we actually built a bridge so that people could upgrade Poly from Ethereum to PolyX on Polymesh. PolyX is the native blockchain token for the Polymesh blockchain. And so we did effectively build a bridge. All you could move was Poly, though. You couldn't move any other tokens. And so, yeah, it's something that we think about a lot. The more we talk to institutions, the more that they think there's going to be this sort of multi-chain future where there's a ton of different assets on a lot of different things. How exactly do they connect? Is it something like the Chainlink interchain protocol or something, or some other new protocol that doesn't even exist yet? We don't really know. For us, the concern is, how do you maintain all of the compliance criteria of an asset when it lives on one chain and then it goes and trades somewhere else? And so it's very difficult to do that. So it's not really a huge concern that we're putting a lot of developer resources in today, but I'm almost certain it will be, call it 5 years from now.
All right, thank you on this info, Graham. So yeah, now that we started to talk about tokens and different parts of Polymesh, I suggest that you basically walk us through its most significant parts. I know there is an interesting consensus mechanism built in, kind of fitting nicely into the format into like overall format of the blockchain. So all the fundamentals that you can mention for us, starting with the mechanism, going to token, to your improvements on this ERC 1400 standard. So yeah, would be very curious to learn about this.
Sure. Yeah. So Polymesh is a proof of stake blockchain. It uses nominated proof of stake consensus. And so I mentioned Polymesh is built on the substrate framework. So if anyone has ever interacted with Polkadot at all, it's very, very similar. You can have some tokens in a wallet. You can nominate different validators that you want to stake on, and then you can earn proof of stake rewards from doing so. So very, very similar to anything like Polkadot or anything else on Substrate. It's pretty similar out of the box. I think we tweaked a few parameters, but it's quite similar to what Polkadot does. So the PolyX token, I also mentioned there was originally Poly, which was an ERC20 token. People could migrate that one-to-one. For the PolyX token on Polymesh, PolyX is the native protocol coin of Polymesh. And so I think right now, I mentioned there's about 4,000 KYC users on the Polymesh blockchain. And a lot of those users are really just staking and interested in eventually purchasing some assets on chain. So there's, I think, a little over 30 assets on chain today on the Polymesh blockchain. And I think people will soon. We just put out an announcement about a new fundraising platform called Raise Finance, which just announced that they'll be migrating their infrastructure to the Polymesh blockchain. So there will soon hopefully be a lot of assets that people can actually end up purchasing on Polymesh. And so a lot of that has to do with the improvements over ERC 1400 that we came up with. And so just to talk briefly about that. So as Jordan mentioned, when you're on a blockchain that's kind of general purpose built, all things to all people, you do have to have this secondary layer for things like compliance and also for things like token creation, which makes absolutely no sense now, especially since we've learned kind of the main reason for blockchains is to just make a bunch of tokens. Like that's pretty much what people use blockchains for today. But Vitalik didn't really realize that back when he created Ethereum. Satoshi didn't really realize that back when he created Bitcoin. It was just kind of this, let's create a blockchain and there's an underlying coin, and then maybe people can build stuff on top, but they didn't exactly know what people were going to build on top. But I think we've realized now people just want to build tokens on top of them. And so the crazy thing is that because Vitalik didn't really realize that when he's creating Ethereum, is creating a token on Ethereum, the blockchain doesn't understand what an ERC20 token is. Like, I'm not a developer. I'm not going to go into crazy detail or anything, and I don't even really understand it. But the point is, the Ethereum blockchain doesn't really understand what a token is, And so because of that, you have to create a smart contract, and that's how you create a token. And then you can transact tokens, but the fees are so high to do so because the blockchain doesn't understand it at the base layer. You have to create this smart contract thing in order to create a token to do anything with tokens. And so what we said at Polymesh is, okay, that makes no sense. All we're going to build this blockchain for is for people to create and manage tokens. The blockchain itself should understand the logic of token creation and management. So when we were creating ERC 1400, it was starting to cost people $50, $100, $200 to create an asset on the Ethereum blockchain. And the reason is because with ERC 1400 and just with securities in general, there are so many weird things that you might have to add on to your token. So, for example, if I'm creating a stock on Ethereum, I might need a smart contract that says only parties that I've KYC verified are able to transact this asset. But then on top of that, I might have something that says ensure that the only parties that can transact are from certain jurisdictions. On top of that, I might have something that says ensure that there are no 24-hour volume transfer restrictions that are violated when people are trading this asset. And so there are a ton of weird regulatory things that people need to take into account when they're programming a security on a blockchain. And when the blockchain itself doesn't understand that logic, it all has to be done in smart contracts. And so that's why the way I think about it is tokens on Ethereum that have any kind of logic like that built into them are so heavy. Like they're computationally very heavy. They weigh a lot. It's very heavy to move them around. It's very heavy to make any changes to them. And so we were actually even starting to hit the limits on Ethereum gas in, call it, year one of development. So you can imagine 5 years from now, 10 years from now, 20 years from now, when all development is on blockchains and all securities are on blockchains, it's just going to be so complex, this web of infinite smart contracts that just are computationally so expensive. So on Polymesh, we said, okay, let's bake all of that logic for token creation and management into the base layer of the chain. So today on Polymesh, I can create an asset. I can set up who can and who cannot hold the asset. I can set jurisdictional flags. I can set accredited investor flags. I can create attestations for anything I want. It's completely arbitrary. I can also ensure that some other third party, like my transfer agent or like my custodian or like my investment advisor, can manage an asset on my behalf while I still maintain ultimate beneficial ownership. Like this stuff doesn't even exist on Ethereum, and on Polymesh it exists in the base layer of the chain. So it's very, very lightweight to create and manage assets on Polymesh because we built the ERC 1400. Like we've understood that space better than anyone else in the world, in my opinion. But Ethereum just wasn't built for that kind of stuff. So of course, it's not really that good at doing things for securities. But Polymesh, from the base layer, understands all of that kind of logic, which makes it really, really good for securities.
Yeah, being able to set up like this many details about the token that you would like to put on the blockchain is impressive, and yeah. So now, excuse me. Now we know that on Polymesh it's entirely possible and more flexible than any other chain, and that's what I guess regulators would like to see in terms of allowing the tokenization trend to unfold under the rules that they set. And very excited about that. And Jordan, I would actually like to ask you this more of like a general question about Graham mentioned Ethereum not being too flexible and in terms of token creation and the like this weight of the token thing. So we know that Landshare is going to expand into a layer 2 on the Ethereum blockchain. So what's your feeling and your understanding of RWAs being launched on layer 2s and on Ethereum specifically?
Yeah, so everything that Graham said is definitely true. The way that these blockchains are built is that at the base layer, it recognizes the gas token. So Ethereum recognizes ETH, BSC recognizes BNB, but then everything else, like he said, is a smart contract that uses some kind of token standard that's just kind of universally agreed upon, and that's how we exchange tokens on these blockchains. But in essence, they are just smart contracts. And so when you're on the Ethereum network specifically, the gas fees become, prohibitively expensive. If you've ever tried to swap a token on Uniswap, or even just deploy a token, or even just transfer a token, the fees become too high and it doesn't become feasible because it is, like he said, very computationally heavy to do all of this. With a layer two solution like a Polygon, the gas fees are so low that even though it is computationally expensive, it doesn't actually translate to a high cost for the end user. That doesn't mean that that couldn't change in the future. It certainly could if the price of the token continues to go up. You're going to see higher and higher gas fees. But those chains, those side chains, the layer twos, are built to scale and they're built for that purpose to solve that problem with Ethereum. And then talking about compliance layers and things like that, where we can check the accredited investor status, jurisdiction, KYC status, and so forth of an investor. We have seen a lot of different companies that are building soul-bound IDs, like Stobox, for example, that kind of put all of that information into an NFT, and then your protocols, your tokens will check against that NFT for whether or not the user is able to interact with your smart contracts. So it kind of goes back to that idea of building a permissioned ecosystem within a permissionless blockchain. Now, when you're talking about a layer one blockchain that actually has all of that baked in to the chain itself, I think that's really where the advantage of Polymesh is at. You don't have to build on top of the baseline blockchain. It's all there for you. It's built and tailored specifically for this purpose. I do think the general public will continue to use permissionless chains like Polygon, like Ethereum, like BNB. So there is a need to build compliant RWA ecosystems on those networks as well. So I do think that they serve different use cases and they specifically serve different groups of investors. And one of the things I always talk about when it comes to tokenization and RWAs is that this has the potential to be like a multi-trillion-dollar transformation of the financial system. Right now, we kind of view it as just a category within the crypto space, but I think it's more apt to view it as a new paradigm in global finance. So even though the general principles of tokenization and compliance are universal, you're going to see different solutions tailored to the specific needs of different people. It's not going to be like a one-size-fits-all solution. For one person, they might look at Polymesh and say, "This is exactly what we need. This bakes everything in for us. It makes it super simple." And then someone else might say, we want to build on Polygon, we want to build on Ethereum because there's more investors on those networks at this time. So I think, like Graham said, there's going to be kind of a multi-chain feel to it. There's going to be assets that are on different chains, and it's going to be important to have interconnectivity between them. But I think, like I said, it really does come down to tailoring solutions to the needs of individual consumers, tailoring to institutional investors versus retail investors. And that's kind of how it's going to move forward. I think we're going to see more and more solutions that are designed specifically to solve specific problems.
Yeah, I like this idea of the Internet of blockchains. If I may refer to it this way. All right, so I suggest that we jump to talking about KYC because it's a very important thing when it comes to regulated assets, when it comes to RWAs, and generally, my idea is that my understanding of it is that KYC is important, and if we want mass adoption to come for all things blockchain, we need KYC in a good and non-intrusive way. So yeah, with both Landshare and Polymesh requiring their users to pass KYC, which stands for Know Your Customer for those our listeners who are not familiar with the term. Yes, and it means the process of verifying the customer's identity for the purposes of security and transparency and stability even. So yeah, I suggest that we talk about why we need KYC in general, and then jump to the specific requirements that Polymesh has and Landshare had. So Graham, would you please offer us your vision?
Yeah, so to onboard to the Polymesh blockchain specifically, the KYC requirement is quite light. It's a simple identity check. People have probably done it a million times before when you join a cryptocurrency exchange or whatever. So Polymesh today, there are 3 approved CDD providers, customer due diligence providers, KYC providers, whatever you want to call them. There are 3 of those providers that you can use: Jumio, Netkey, and Fractal. You go through, maybe you take a photo of your face, maybe you move your face around a bit, take a photo of your passport or driver's license or whatever, and you're pretty much good to go. I think they might do proof of residence as well. I can't remember. Shows you how long ago I went through the process. But yeah, it's quite simple. And so on Polymesh, you can think of there as being sort of 2 different levels of KYC. There's the blockchain specific KYC. So that's to onboard to the Polymesh blockchain. That's to get a decentralized identity on the blockchain. Then there's also asset specific KYC. So JP Morgan might have different requirements for their assets than Goldman Sachs, than Bank of America, than HSBC. And so when they're creating assets in their own little kind of ecosystems on the Polymesh blockchain, they would have specific requirements for their specific assets that might be beyond what the base layer blockchain KYC is as well. So I just wanted to touch on that, where there's the blockchain specific KYC, then there's also the asset specific KYC that an additional issuer might have for their specific asset.
All right, so yeah, that's pretty clear. And Jordan, let's talk about Landshare's KYC process. And I know that yeah, there are certain parts that require it, and there are certain parts that don't require KYC on Landshare.
Yeah, so when you're dealing with securities, you obviously need to know who your customers are to make sure you're compliant with the laws and regulations of whatever jurisdictions you're operating in. So at Landshare, we do require KYC to start investing in the properties. But once you've done that, you're able to participate freely in all of the platform features. And it's kind of similar in the sense that there's a baseline level of KYC where you just provide a photo ID, a picture of yourself, your address, some basic information, and that will give you a certain investment limit. And then if you're interested in raising your investment limit, there'll be additional requirements like, proof of income, for example. So I think KYC is one of those things in the crypto space that can be viewed as a negative thing. Some people are put off by it. But I think there are actually significant benefits for the investors to getting KYC because when you complete the KYC process, your investment is not just tied to your wallet address, but it's also tied to your identity. So if you happen to lose your wallet or if it gets hacked, you can get your assets transferred to a new address, which provides you with a layer of security that just isn't really present in normal cryptocurrencies. Obviously, if my Ethereum wallet gets hacked and someone steals my Ethereum, I have no recourse there. It's just gone. But with security tokens, we have your identity tied to your investment. So you have that extra layer of protection. And as regulations become more of a thing in the crypto space, KYC is also going to become more of a thing. But we view it overall as a positive because it's ultimately necessary as we move into the future. And I think it just makes everything more secure on both ends of the transaction. So yeah, I think KYC, it's simple, it's easy to do, straightforward, and it definitely offers you an extra layer of protection.
Yeah, and I think when the whole blockchain trend was, was starting, and everybody was excited about being anonymous while transferring some value from, from A to B. It was a real thing, and then all the protocols came, and all the actual products came. And when you need to do some serious business, and you need to know I would say to communicate that you are you on the blockchain, and you need other people to know that's you. KYC becomes actually a good thing, and a thing that's needed. All right, so now that we have been talking about KYC, and it's kind of the a part of the onboarding process into both projects. But right now, I would like to ask you about you, Graham, first, about like the general onboarding process into the blockchain, and into starting using it, and taking advantages of what it offers. Not simply in terms of KYC, but like the whole process. What do I need? Specific tools, and all this.
Sure, yeah. And so to onboard on Polymesh, we talked about the KYC process, which is kind of the not fun stuff. Some of the more interesting things maybe. So we have a Polymesh wallet that people can use. They can use that as a Chrome browser extension. You download the Polymesh wallet, you go through the KYC process, you get a decentralized ID attached to one of your accounts. Then you're good to do anything in the Polymesh ecosystem. So there's a few tools that people can use. There's the Polymesh portal where people can stake tokens. People can also see any assets that they might have invested in there. And then people can also create and manage assets using some various tools as well. So there's one called the Polymath Token Studio. So I mentioned Polymath was the original company that started building tools on Ethereum. Polymath still operates some tools on the Polymesh blockchain, and so one of those is Polymath Token Studio. Point and click interface, really easy to go create an asset, manage an asset from there. There's other companies like Raise Finance, which I mentioned, which will be onboarding pretty soon, a fundraising platform that's done about $100 million in fundraising. DigiShares is another company that people might be familiar with. They're very, very close to putting out some news with us, potentially, maybe that they're onboarding to the Polymesh blockchain. There's a teaser there for the people. Yeah, so there's a few different things to do. Easiest way to get started is to go to our website, polymesh.network. And then you can find the Get Started button. I think it's right there at the top, and you can download the wallet and you can get started with Polymesh.
Yeah, thank you for the instruction, Graham. And Jordan, maybe we could share the onboarding process of Landshare.
Yeah, so the first step, if you want to invest in properties, would be obviously to complete the KYC process, sign up for an account on the dashboard. Once you've done that, you'll have access to all of the real estate investment features, but you will need a Landshare token in order to participate in the STOs. The Landshare token is also necessary for using the NFT ecosystem, and for token staking, and for DAO governance. So the first step, obviously, is to get some land token. You can get it on PancakeSwap or Gate. And then once you've done that, you're going to want to go to the dashboard, sign up for an account, and complete the KYC process. At that point, you'll have full access to all of the different features on the Landshare ecosystem. When you're making your investment into a property, after completing the KYC process, you'll also get a purchase agreement, which outlines the terms of the transaction. And once you've signed that, you'll be able to make your investment, and your security tokens will be sent to your wallet, and you're now invested in the property. So it's a really straightforward process that makes investment a lot easier. And we make sure that all the documentation, operating agreements, purchase agreements, everything's outlined there for you on the dashboard. So there's a lot of transparency there as well. And with our new update, our new RWA token update coming out this month, we'll make it even easier to get onboarded, and make it even easier to purchase and invest in real estate assets. We'll have a new RWA portal page, which will allow you to both buy and sell RWA tokens directly from the Landshare app instantaneously. And then a little bit later on, we'll be deploying the RWA token to the DS Swap DEX, which is a decentralized exchange designed specifically for security tokens. And that will allow you to trade your security tokens just like you would trade any other token on Uniswap or PancakeSwap in a decentralized liquidity pool. So we're really excited about that. And that'll be coming up shortly here, along with the RWA token update this month.
Yep, sounds very streamlined and even familiar. All right, so I guess we could go to the part where you, our dear speakers, share your roadmap milestones for the immediate future and for the long term. And I suggest you, Graham, share with us some of the plans and what's to come next.
Yeah, for us, it's all about adoption, and so however that happens, whether it's gigantic institutions onboarding, whether it's fundraising platforms, whether it's someone tokenizing their bicycle and selling that, really whatever it is, we found a bunch of different and very interesting use cases. We recently did a proof of concept with a top 10 stock exchange, so one of the largest stock exchanges in the world, put a carbon credit on the Polymesh blockchain. And so, we had no idea that that would be something that people were interested in 5 years ago. I would not have guessed that as being a really big use case for security tokens on blockchains. And so, we have no idea what's going to be the breakout hit. We have seen, however, a bunch of tokenized treasuries as being very exciting. We've seen, I think there's a few $1 billion in tokenized treasuries that are now circulating on blockchains. We've obviously seen real estate with platforms like Landshare. There's a bunch of other ones. There's one called RE tokens that's on the Polymesh blockchain. There's a number of different real estate platforms that are getting really exciting to see. And Landshare is really driving that forward, which is great. So yeah, in terms of long-term vision, it's trillions of dollars of assets on blockchains. I think that's kind of a no-brainer that that's going to happen. And really for me, it's a matter of when, not if. And so I guess just to kind of close out my comments here, one thing I love talking about is this inversion that's going to happen where, pre-internet, a business that was only on the internet and not in real life was kind of sketchy and weird. You couldn't really trust it. But a business that was only in real life, that's great. They have a physical business, that's good. You can trust them. They're right down the street. Now, businesses that are only on the internet are the most trustworthy ones that exist. And a business that's only in real life is kind of weird and sketchy. It's like, wait, what do you mean you don't have a website? And that really only happened in 20 years. But now it's like so obvious in hindsight looking at it that would be the case. You have infinitely many reviews that you can do online. Websites mean that, people at least have some legitimacy. People that are only in real life, maybe they're money laundering. And so I think that's been really interesting. And so what's happening right now is financial securities that only exist in a legacy system, like the Nasdaq or the New York Stock Exchange. Those are great. Those are trustworthy businesses. Those are auditable. They're with big, good companies, and businesses that are maybe security tokens. Maybe kind of weird. Why aren't they listed on the Nasdaq? Why aren't they on the New York Stock Exchange? It's kind of strange. It's kind of sketchy. But what we're seeing now is people are starting to realize, okay, wait, if my asset is not on the blockchain, like maybe people are altering the data without my knowledge. Maybe things are happening in back rooms that I actually don't really understand. I can't. Why aren't there attestations on all of the securities that I'm trading, where I can see all of the different kinds of KYC providers that are allowed to provide approvals? So all that kind of inversion is happening too. Where what's happening now is people are realizing blockchains are actually going to be the trustworthy and mechanism that makes sense for financial securities. And these things that live in siloed legacy database systems are actually kind of weird and sketchy. It's like, wait, what do you mean your security isn't it isn't good enough to be fully transparent on a blockchain? It's like, well, what are you doing? It's kind of strange, kind of weird. And so that thing is something I'm really, really excited about. And that's kind of why I see this long-term vision of all assets being on blockchains playing out.
Yeah, that's, by the way, a brilliant observation about people looking at blockchains as opposed to Web2 businesses. That's exactly the state of things right now. All right, and Jordan, I would I know that there is this there is this RWA Pioneers NFT claim going on, whose holders are going to gain access to a private round of the upcoming STO on Landshare. So please also share the immediate goals and milestones, and share some details on this specific development.
Yeah, so right now we're wrapping up our Real World Explorers campaign, which has been running for the past 2 months. And that campaign culminates in the launch of our brand new STO and platform update. So we've recently started a new sprint on Zeely that has a 4,000 land prize pool. These campaigns really help us spread the word about tokenization and Landshare. So for anyone who's interested in competing, be sure to check that out on our Zeely page. And as you mentioned, we did drop the new RWA Pioneer NFT, which is available for any of the top 300 participants of the Zeely Sprint and all of the previous security token holders. This NFT is going to have some really cool utilities, so be sure to grab it if you're eligible. The first thing, like you said, is it will grant access to a pre-sale for the new STO, and it'll let you pick up the new RWA token at a slight discount and also earn some extra rewards for participating in the sale. So make sure to claim your Pioneer NFT at any time before December 6th at 5 p.m. UTC. That's when the claim period ends. Then roughly about a week after that pre-sale starts, we'll drop the main sale and the RWA token update. So if you're not familiar with this new feature, it's a brand new tokenization model and platform revamp that we've been working on for the past several months. And we're really excited to finally get it launched to our community. If you want more information about that, our Medium page is the best place to find all the resources and articles that go into all the new features. And then also keep an eye out for an article dropping probably later today, which covers some of these things in more detail. It'll cover more details about the RWA Pioneer presale, and it'll outline the rollout plan for the RWA token update. This update will roll out in a few different phases, starting with the migration of the legacy asset tokens into the new RWA token, and then the migration of the NFTs. So that'll outline all of that information for you. And yeah, I mean, we've got a lot going on right now, and we're really excited to finally get this big update out. Then looking forward to next year and towards the end of this year, we're going to be dropping a new updated roadmap for 2024. I mentioned a lot of our top priorities in the previous AMA, but some of the things we're looking at, obviously multi-chain capabilities, looking particularly at Polygon, but we're obviously open to any different chains. So if the community has any feedback on that, we're certainly open there. The other thing we're looking at is expanding the different types of properties that we offer on the platform. So right now we focused on single family rentals, and we'd like to maybe explore short-term rentals like Airbnbs, multi-unit properties, mixed use, whatever serves our goals and serves our purposes best. We're going to be taking a look at diversifying into those opportunities for our community members. And yeah, there'll be a lot more to come on our roadmap for 2024 towards the end of the year. But for the time being, you can also check out our Medium page. Our latest article does cover a lot of that information and a lot of our top priorities for 2024.
All right, with Polymesh, looking forward to trillions in TVO, hopefully, and Landshare looking to expand and add more properties. We are going to cheer you on this journey. Yes, and these plans are very exciting, being in this space and listening to you. All right, so at this point, our official agenda is finished, and we can go on to our community's questions. So as usual, please start waving your hands if you want to ask your question live. I'm going to bring you onto the stage. Yeah, and you are going to ask your question. All right, Skywalker, I can see you waving your hand, so I am inviting you to speak. All right, something is up and Skywalker is not connecting. So if anyone else would like to, while Skywalker is not available, if anyone else would like to ask their question live, please, yeah, please raise your hand. Tokyo, I am connecting you and adding you as speaker. We're waiting for Tokyo to connect. All right, this is taking some time. Yeah, Tokyo, you're a speaker now. Please ask your question. Tokyo, can you hear me well?
Yeah, hello. I'm quite curious on some centralization. Yeah, I think I should be audible now. Centralization, prevent that on Polymesh. I see there's a lot of KYC,
Could you please repeat your question because you are breaking?
see the other measures to structure activities sorry happen. So
It's okay. Hopefully, you can go to a place where your connection is better because we couldn't hear your question. I'm gonna remove you for now and introduce.
yeah, I'm just quite curious on them. How do we try and make Polymesh more decentralized? How would you try and have
Something is going on.
that decentralization on this platform?
But yeah,
All right, something weird is going
I'm
on.
not sure. I know it was a Polymesh question. I heard Polymesh, but it was kind of stopped there, so I'm not sure.
I think it was about how to make it more decentralized, I think is what I heard.
Sure. Yeah. I mean, so how to make Polymesh more decentralized? So I would say the easiest answer to that question is financial institutions who are creating and trading trillions of dollars of assets don't care about that. So we do not care about that. You know, I know people in the crypto space probably don't like that answer, but that's ultimately how they feel about it. They actually want more centralization rather than less. And so for us, with this one specific use case, you know, Polymesh isn't designed to you know, be the next Bitcoin or the next Ethereum. It's designed to be infrastructure for the world's settlement of financial assets. And so we think we have a pretty good governance structure in terms of how the Polymesh Governing Council operates. We're actually also expanding how the Polymesh Association functions in terms of who can actually join the association and some membership roles and things of that nature. And potentially there are separate technical committees and there are separate open source projects that members sponsor and things of that nature. But yeah, ultimately, you know, decentralization is not the most important thing to us because it's not the most important thing to our end users.
All right, thank you for your answer. And yeah, actually, you know, moderate centralization is sometimes not as bad as you know one might think because we need you know serious institutions to join the blockchain industry, but we need more. Like we like the way they work, but we need more transparency. And I guess Polymesh is a perfect solution, the perfect solution for that. All right, so Junior, I can see you waving your hand, so I'm connecting you right now. You are speaker now. Please ask your question, and please specify the person who's gonna answer.
Yeah. Um. Can you hear me?
Yep, loud and
All
clear.
right. All right. So my question is to Landshare. I just want to know what is the challenges you're facing in order to onboard Web 2 similar kind of users, into the Web 3. And do you have any issues related to UI and UX? Maybe if there is any challenge related to UI, UX, and in marketing that the team has faced, and what you've done in order to fix these challenges.
So I think I got most of your question there. In terms of UI and UX, one of the things that we're really focused on is building an interface and a user experience that makes it as simple as possible for the average investor, somebody who's maybe investing $100, $200, to actually get involved, and something that feels familiar to them, something that feels familiar to someone who's used to crypto and DeFi, and making sure that our token feels like something that they've used before, so it's intuitive and understandable to them. I think that's one of the big points of emphasis with our new update and our new STO, is really making our security token kind of resemble in many ways any other traditional token that you trade on DeFi. DEX trading, staking, swapping, those kind of things. That's kind of the user experience that we want to build, something that's intimately familiar to DeFi users, existing DeFi users, but is also simple enough for somebody who maybe isn't as experienced with DeFi to get involved with. And that's why we're looking at adding card payment options, so that people who may not be used to using like a Web3 wallet or a MetaMask extension wallet can still invest and can still participate, but with that lower barrier of entry. So yeah, I think that those are the main challenges that we're trying to solve, is making our product and our user experience very familiar to people who use DeFi, and also making it easier for people who may not have experience with DeFi, who may prefer to pay with a credit card or debit card, and use that method to get onboarded to the platform.
All right, that's cool.
Yeah, thank you for your question, Junior. I can see Saint Maxwell waving their hand, so I'm connecting you.
Yeah. So in terms of I guess blockchain security, so we've been alive for 2 years now. There's been zero outages. There's been zero hacks of anything, including the bridge, which has seen I think about $700 million go across it or something like that, around there, or 700 million tokens, which is let's call it like $200 million, I think. And so in terms of security, I think that's a pretty good track record. 2 years, zero hacks, zero downtime, 100% uptime. So I'd say the blockchain is pretty good. I mentioned the staking, so nominated proof of stake. I don't think there's any other substrate blockchains that have been hacked in terms of the consensus mechanism, so that bodes pretty well for us as well. And then there's 17 licensed financial entities that are operating the nodes, and so when you look at that, it's highly unlikely that one of those actors, which has a broker-dealer license, which has a custody license, which might be a full-on bank, one of those actors to quote go rogue and try to take over the network, it's very, very unlikely. So that also gives us a big benefit as well.
Thank you for this question, Saint Maxwell. And obviously, thank you for the answer. So if anyone else would like to ask their question, please go ahead and wave your hand, and I'm gonna connect you. All right. So I guess we had at this point we have no more questions. Please don't forget to drop your questions in the comment section as well, because those count too. And at this point, I guess we had a nice conversation with you, gentlemen, on RWAs and nice things that come with them. And we learned more about Landshare. We learned new stuff about Polymesh. And I guess at this point we can wrap it up. If you have any closing remarks, I would encourage you to take the mic.
Yeah, I'll just say go follow us on Twitter. I don't know if you thought anything I said was interesting today, or you want to learn more, or you want to go DM me. Feel free. You can follow me at More Grams. You can click my icon right there. You can also follow Polymesh, which is listening to this chat. You can see the big P logo, P for Polymesh, and then go follow Gleb and go follow Landshare as well.
All right, Jordan, maybe you have some closing thoughts.
Yeah, I'd like to thank Graham for attending this AMA. I think we all learned a lot here, and what Polymesh is doing is really interesting from the perspective of onboarding these financial institutions who may have apprehensions about using public permissionless blockchains like Ethereum, giving them access and giving them a tool that really bakes everything that they need into the baseline layer of the blockchain. Super interesting stuff. Yeah, definitely follow Polymesh and Graham on Twitter. Very interesting what they're doing. And for our community, like I said, be sure to keep an eye out for a new article dropping today that will provide some additional details about some of the stuff we got going on right now. And then keep an eye out for the roadmap coming towards the end of the year and the RWA token launch coming in the middle of the month.
Yeah, this has been an exciting conversation. Thank you, gentlemen, once again. And to you guys, we are going to catch you up in the next one. Goodbye.